Folks, good morning and welcome to Swing Trading Today. This is Bob Desmond. It is 5:40 in the a.m. Eastern Standard Time. Welcome to the Contrarian Trader. And let's kick things off with the commentary I sent out on Sunday to members with regard to the health of the overall markets, in particular, the price action of the Dow Transports and the Dow Jones Industrial Average. Take a listen. The Dow Transports, bad stuff. Let's update this chart. Okay, so you could see here that we are putting in lower highs on RSI, on price. Rolling over on Stokes, MACD, lower highs. We have problems here. And I mentioned, I believe it was last week, that we were seeing strength in the transports, weakness in the Dow Jones Industrial Average. That wasn't going to last. One of them was going to be right. And it looks as though the Dow Jones Industrial Average may in fact have it right, because the Dow Transports are now breaking out. And in fact, we broke down below the lower band of support. Now, one of two things is going to happen here. One, we make a continuation breakdown next week, or two, we rally back in an effort to try to recapture resistance. And we may dance around there for a week or so before we either break out or roll over. And that rollover, if we get it, is going to be very ugly. Volume was not that bad last week, slightly below average. So beware the transports. The Dow Jones Industrial Average. You can see a very similar price action setting up here. The Dow Transports are more now in alignment with the Dow Jones in that we are putting in lower highs. I don't think we broke down last week on the Dow Jones. Let's update this. We certainly did on RSI. Yeah, we did. We did. Okay. So, yeah, we have volume here. This is not good. It's a failed, it's a head fake breakout on MACD. Not good. We did break down last week, and rather significantly. We also broke down on RSI. And as I just mentioned, MACD gave the appearance of an attempted breakout above the slow line, fast line above the slow line, but it failed. So that's a head fake breakout. I think that we're probably going to head lower here in the coming days. Daily chart, very weak. I mentioned on Friday morning that we would probably fade. We did fade into the close, and rather significantly, at one point we were down 102 points off the highs. We did manage to bounce at the close, closing down about 83 points off the highs. Volume was very strong, but this is misleading. You need to really take a look at the intraday price action before saying that, wow, what a great up day, because when you take a look at a 15-minute chart, take a look at the volume into the close. A big volume bar to the downside. The NASDAQ Composite weekly. And as you could see, that yesterday, this is a weekly chart. Yesterday, we put in a new continuation breakdown on the Dow Transports. What appears to be setting up here a double top, and this market is certainly under pressure. Now, rather than listening to the slick-back salesman on CNBC late last week, had you been listening to me, I was warning about the Dow Jones fading, the threat of a fade. Let's get to that chart. On this day here, we had rallied and we closed off the highs of the day. Now, over the weekend on Best Stock Charts, it's still posted on the blog, I warned about the price action on Friday in that we had, yes, rallied after putting in, about 8-9 days of sequential down days. We rallied, but we closed well off the highs of the day. We had Stokes, which were trading down below the 50 level. And as I always warn members, rallies tend to fade when you get both lines on Stokes down below the 50 level. And sure enough, we faded on the day on Friday, And I predicted over the weekend that we would probably see a sell-off in this market. And sure enough, we got it. Is it over? Let's get to the pre-market activity and see how we might open this morning. Okay, so for the purposes of this morning's conversation, as always, we're going to go with 4-hour charts. And you can see that the Dow futures are down slightly, not by much. We did, in fact, bounce, forming this bullish key reversal yesterday, and we broke out above an upper band of resistance. Now, what we want to do is watch for a breakout above this upper band of resistance. Or do we pull back, retest, and break these two support levels here? If we break down below yesterday's lows at 24,077, it's going to get ugly real fast in this market. And if we rally, I would expect that we would rally up to this declining 20-period moving average in blue. You can see how it's been acting as a declining ceiling on the Dow for the past several days. The S&P futures, they bounced as well yesterday, and they are down at current about 1.5 points, not much. But we are holding on by a very, very thin thread to this lower band of support. So if we break down below yesterday's lows at 2,700.5, we are coming all the way down here at a bare minimum to 2697 and quite possibly 2674. So this is no time to catch a falling knife. This is the value of being a member, going into the week, knowing how the weekly charts are setting up. We spent most of last week booking profits, raising cash, cutting losses, and yesterday we were positioned to book profits in two trades. One was EDC, the other was Cal-Maine Foods, both nice trades. Let's get to the NASDAQ futures. Again, 4-hour chart, not looking good here. We are down only 1/4 of a point. We just went positive, but I don't like this. When you have a series of lower highs and lower lows, and then you get this dead cat bounce off of this third standard deviation Bollinger Band, more than likely, this is going to fail. This is an ascending wedge formation, not my favorite formation. This is a continuation breakdown pattern, not loving it. I think that despite the fact that we just went positive on the NASDAQ, it's not going to hold, and in all probability, we are going to fade. The 10-year Treasury note. Folks, all we've been hearing is about the Federal Reserve and their aggressive rate policy, how hawkish they are, how they're going to raise rates a couple more times this year. That's not what the bond market is saying. Again, 4-hour chart, you could see that we're putting in higher lows and now higher highs. And what we're looking at here is a bull flag setup on this 4-hour chart. Now, unlike that ascending wedge formation on the NASDAQ, which is a continuation breakdown pattern, this is a bull flag setup, and it's a continuation breakout pattern. So if you have the notes rallying, that means you have the yields declining. And that's the market sending you a signal. There's something wrong out there. Why aren't yields rising with the Federal Reserve promising to raise rates more after just raising rates another 1/4 point? Think about it. Let's take a quick look at the dollar. Overnight, the dollar began to break down below critical support. It has bounced back and is now back above the 94.50 level. Will it hold there? Maybe, maybe not. What generally tends to happen when you get these rollovers, yes, you get a dead cat bounce, but this 20-period moving average, which is now declining, acts as a ceiling and will pull back, drop down to new lower lows, rally back, again, hit that 20-period moving average, and you'll see a sell-off. Much as what you had back here. Sell off at the 20-period, sell off at the 20-period, sell off at the 20-period, until finally it doesn't happen anymore. Now, if the dollar is rallying this morning, that does not mean good things for gold, and gold has just made a new weekly low. Not good. We are now down $10.30 on the session. Not looking good here. All right, let's get to stocks that we're looking to trade, as well as members' stock chart request. First up, Cal-Maine Foods. We booked profits on Cal-Maine Foods yesterday after buying the shares right back here on this breakout on the 29th of May. And the investment paid off handsomely. Now, we did book profits yesterday because we were beginning to break down. We did rally back off the lows of the session. We'll be willing to buy it back on a breakout above resistance. I do think that we're probably longer term heading up higher here. The goal yesterday was to preserve capital, book profits, raise cash, and that's what we did. EDC, we opened up a long position down here. Let's go to the intraday chart and I'll show you why. So EDC was making lower lows on price, yet RSI was diverging, positive divergence, moving up higher. So we stepped in right here, booked profits right up here. So a couple of dollars, doesn't look like much, but a couple of dollars of a swing trade, profits taken. We moved to the sidelines. With the dollar rallying this morning, it's probably a good thing that we did book those profits. Now, we are going to be looking to reopen a position longer term on the EDC. I want to see a resolution to this RSI, which is really trying to find a footing. And I want to see a bit more consolidation here at a support level on price. Volume was very high yesterday. Uranium Energy Corp weekly chart. We're looking for a pullback and a retest of support or a weekly breakout, one of the two or both. And we'll look to build a position. Daily chart. We pulled back yesterday. You could say this was a retest of support. I'll buy that, meaning that we broke out back here on Thursday of last week. We pulled back, did a retest, rallied off the lows. I like the setup here. We'll be looking to open up a trade. Love the cup handle formation on UEC. The next chart up, QQQX, the NASDAQ Premium Income and Growth Fund. This is a stock chart request. I do not like this setup. We are putting in lower highs on a weekly basis on RSI, rolling over on Stokes. We broke down below the lower band of support on price. Lower highs on Ultimate Oscillator. MACD histogram trending down, not good. Daily chart. We have broken down below the lower band of support on RSI. You could see we broke down below this lower band of support, attempted to rally back on Friday. Yesterday, failed. And it did so on volume. I would avoid these shares. The path of least resistance is now changing from up to down. I would avoid. INCU, weekly chart, not loving it. We have a double top on Stokes, and we broke down this week below the lows of May the 21st on stochastics. Again, double top, and now a breakdown on Stokes, lower highs and lower lows. Now, last week we flashed a bearish key reversal. What does that mean? What that means is that the market sent you a signal, and that signal is that we attempted to break a breakout, and the breakout failed, meaning sellers took advantage of the strength and sold into that strength to book profits and made their profits real. And it wasn't mom and pop selling 100 shares. It was institutional selling. How do I know that? Volume. Volume was very high last week. Do not fight these guys. They're distributing these shares. We haven't broken down below critical support yet. I'm not ready to call this thing dead and broken. MACD histogram trending down. Let's go to a daily chart. On a daily basis, in the short term, we have broken down. It is broken. Longer term, weekly basis, not necessarily yet. We have a double top on Stokes, a breakdown, and by the end of business today, in all probability, we will have both lines on Stokes trading down below the 50 level. And as I always like to say, and I've said it already on this commentary, rallies tend to fade when that occurs. Do not fight this chart. The trend is down. Look at volume. Volume is very high to the downside. Don't fight it. Allow the shares to come to you if you're bullish. Where is support? Support is right here, 195 to 196. If that breaks, we're coming all the way down to 187.50. Let the shares come to you. Box weekly chart. We have a double top on a weekly basis. We'll be lucky to hold support this week. In all probability, we're going to retest support at 24.49. MACD histogram trending down. Last week's price action, very, very bearish. You may be saying, Bob, what are you talking about? We closed up last week. Yes, all up weeks are not created equal. When you get a rally and an up week, yet you close well off the highs of the week, that's profit taking. And you saw profit taking on volume. How do I know that this is not all net buying? It's simple. Take a look at the wick shadow candlestick on this bar, and it's telling you it wasn't all net accumulation. Need more evidence? Take a look at a daily chart. You had profit taking on Tuesday of last week. Wednesday, hammered. Thursday, hammered. Friday, hammered. Might we get a bounce back today? Tomorrow? Sure. Do I believe that rally will fade? Yes, I do. I think it's going to fade. So, folks, in closing, a warning flag is on the track for this market. Learn the charts. Join the contrarian trader. If you don't have time to look at the charts, I understand that. That's what I do. It's my passion. I'll explain to you each night what I'm looking at over the weekend. You'll go into the next trading week educated on what I'm seeing on the charts. Had you been a member over the weekend, you would have gotten the week ahead commentary. Don't hesitate. Join up. 14 days free. If you're not ready yet, that's all good. Follow me on YouTube. Leave a comment below. I will get back to you. If you found me on other social media, StockTwits, Twitter, Facebook, whatever, woo-woo, follow me there. Click the like button. Leave a comment. I'll get back to you. Everybody have a profitable trading day. Be well.